when you think about it.
Yeah. And I was just thinking today how, crypto is one of the most dangerous markets. It's the fastest moving. It is really like compare it just to Forex or stocks or anything. This is like hyper speed. And here, just look at the monthly candles, look at the two weekly, you got to balance out the volatility and the speed with your approach. So, in Forex, you can play around with 1 hour candles and 4 hour bars and do this intraday trading because these moves are minimal. But here in crypto, if something just blows up 40% in 1 hour, like that's an ordinary day. So you cannot go into that. You cannot, you have to balance out these crazy movements with your approach and your strategy. That's why patience is key. That's why I like when we always zoom out and we start a chart with like a 2 week view, right? And we don't
Yeah.
even go into those 4 hour details that much once in a blue moon. So yeah, it also goes there because as you say, these YOLO uh participants of the market, I think they go too crazy with how they approach and the things they look at. They look at the small time frames. They think they can get rich very quickly, and that's how they get burned. And it's just a constant churn of new participants and many losses. And who gets richer? The whales get richer, and the regular investors or traders get burned, and they just get the liquidity off of them. That's all it is.
Yeah, it's true. I mean, you couldn't really put it much better than that. It always comes down to that because what they can afford to lose, me and you can't. It's just
Right.
that. And what me and you are expecting, and we just spoke about it literally 10 minutes ago before we hit the record button. Even when me and you were expecting these things to happen on the microeconomic scale already way in advance. I mean, we were talking about it for 2 years now, where stuff that's coming to fruition now. And it's even hard for us because you were just talking about how expensive your utilities are over there in your country. And then I was talking about just how stuff it just won't stop. Your income is not living up to the model of how much stuff costs. So you're constantly having to say, I'll lack in this area so I can excel in this area. And then 6 months later, you're either balancing out or you're still underwater just because you can't ever get to that,
Right.
not so much whale territory, but just where you kind of get to that comfortable stage. And this is coming from a guy that has no outstanding debt. And it's hard, and I have no outstanding debt on my behalf, and I can only imagine for people that two car payments and house payment and I mean I just couldn't imagine it anymore. I couldn't. I don't know if I could put myself through it again.
Mhm.
I've been there, done it, of course, and I just don't know how people are doing it with interest rates. Just like old girl looked at a car there the other day, and first one she looked at, they were wanting almost $1,000 a month for the car payment. I mean, when you're only bringing in $2,400 to $3,000 a month, you can't have 33% of your budget going just to a payment, and then the car insurance was going to be like $300 a month. So she would have had over a third of her gross, not net, not what she would bring home, but a third of her gross would have went to a car payment.
Yeah.
That's how you know everything is we're at this imbalance. We're at such an imbalance now. Something's going to happen, as you said. You would call this black, as you did earlier. You said like a black swan event, but it may not be something that's a black swan, but it's going to be something that's going to
Significant.
have to rocket. Something's going to have to rocket in the favor to at least start the tread down.
Hmm.
Haven't gotten that yet. Uh, More banks probably would need to collapse. Housing values definitely need to come down. Uh, People aren't buying new houses. The mortgage applications are at lows not seen since 18 years ago. Them valuations have to come down because they bought their homes in a low interest rate environment. So the
Right.
only thing in theirs is they're not going to sell their home because it'd be stupid to go out and buy a house for 7 or 8% interest rate. It just hit 8%, which is the highest since 2007. And I remember that year vividly because me and my ex-wife, we were looking to actually build a house. And at that time, we were going to get an interest rate of like 7.7%. And this was back in 2007 or whatever. We had to actually completely do something completely different just because the house that we was going to build, we got priced out of it
Mm-hmm.
at that time. So we had to actually downsize our expectations. And that's exactly, but the problem you have today where you didn't have in 2007, you still had options to downsize your expectations. In today's time, you don't have that option. You really don't. So like they say the average home in America is around $400,000. Of course, that's contingent on your area you live in, whatever part of the country, but you can't downsize. So let's say in my area for general, right? Let's just say I'll just compare it to my state. My state essentially $150,000 is probably the top, for most people. Okay. Let's put it there. And they'll say, well, okay, that's basically what you're finding. You're not finding that $100,000 to $125,000 house unless it's in the middle of nowhere, dirt roads. You're driving up a mountain, you can't get down in the winter time in the snow and bad weather. So something's going to have to give here. We can't continue this pace. And what does that mean for us in the short term? What does that mean for us in the market short term? That's basically what we got to ask ourselves.
It's like, something's coming, something heavy, and it's just put on ice, and you're just waiting for the crack, because it's obvious that things are just getting too heavy to sustain, and we're just moving along this ice. And like you said, it doesn't have to be a black swan, a COVID type of situation, or a sudden thing, but it can just be the straw that broke the camel's back finally. Like little bad news, like a string of bad news, and this and that, and now the climate is getting worse and worse. It could be political, it could be economical, it could be whatever.
Well, we're to that point again where now the littlest bad news is going to be exemplified and magnified. So it could be something that's on a very small front that you would have absorbed, let's say a year and a half ago. That information won't be absorbed the same. You know what I'm saying?
Mm-hmm.
So let's say, for example, you hear about a regional bank that may be going under because they are highly invested in commercial properties, right? Well, it's no secret commercial properties are drying up unless you're in the right industry. Okay, there's no malls anymore. There's no shopping centers. Everything's done online. All that stuff's drying up. So if you hear about that little bit of bad news, is going to be amplified. So something where we've absorbed it a year and a half ago and it wouldn't have really affected the markets. It'll be information like that where now it's going to start taking a toll on the markets slowly. And then you're going to see this complacency that we are in. This is what we are. Like, we're in this super huge bubble of complacency. It's like, you ever watch water squishing around in a cup and how it rides way up to the top of the cup and then it'll go to the other side, but it never comes out of the cup? Or how people shake their wine, or like if you got a water balloon and some of the water goes to the bottom and some of it goes to the top, but it's not coming through. That's what it reminds me of. It just reminds like we're splashing at the top of the cup of the water, but we're just not going over it. And it's like we should be.
Mm-hmm.
Should be. And I've seen where they said, okay, what we're doing worldwide economically, whether it's your country or anywhere, bringing down inflation is not working. So the only way to fix it is they're going to have to start printing more money eventually.
The debt each Western country has incurred is just unsustainable. So the only way is prolonging this this medicine that ultimately leads to serious side effects. And I mean, how much money can you pump into the system to keep things propped up? You know, the cheap theatrics really it can't continue.
Yeah, and I saw a thing there the other day, Camille, where they said that we're paying more in interest every month than what we're putting out into our defense, which that's always kind of been the staple here in America is our defense, our defense budget, and now we're paying more in interest payments instead of defense. And of course, we look at, I encourage anybody to go back there and look. Excuse me, nose itching, but I got that habit. I can't afford those habits. We're just talking about how expensive everything is. Now, back in the day, no, I'm just no. But anyways, yeah, it's you see the yields and how they're rising, which we saw on our video there the other week.
Yeah,
the short and long-term yields. Everything is just like setting up for this, like you say, what's going to tip the scales, as you say.
Yeah, something might.
What's it going to be though? Like, okay, now we got a second war we're dealing with, right? And they're short-lived. Okay, they fight all the time over there. It's going to be forever and ever. They're always going to fight. It's just the way it is over there. It's biblical. They're going to fight. Now, the war that you got right there on your border, that's a little different story. We're going in the year 2, with Russia now, and now the world's just used to that war. We're not paying much mind to that war. Now we got a new war we're talking about. But how much more can we keep absorbing? And the only thing I can compare it to, Camille, and you've heard me speak about this many times, and this will probably be where I may ask you to pull up a chart, is back when, Lehman Brothers, collapsed. There's a history that shows for like 3 or 4 months or whatever, the market absorbed, you know what I'm saying? Like the prices stayed there. It absorbed, and finally just 50% down,
Yeah.
And
because the bad news, the real bad news was already out there. And, the panic, the true panic didn't start until, like, as you say, a few months later, where it manifested in a crash.
Well, yeah, see, and I've always, as an investor, looked at what happens in China, because since China has that huge economy, but there, I always look to see how China reacts to things, because I know it comes to America a few months later. It always does. So this is before the pandemic. Of course, they shut everything down here in March or April, in March of 2020. But in China, like a month and a half before, it was already going crazy. They were already having toilet paper shortages and everything like that. And I wasn't dating her at the time, but I said something to my son. I said, I'm gonna stock up on toilet paper, because I see, like, in China they're struggling to keep toilet paper in stock and stuff. And then boom, instantly, my nose, man, something's on my nose. Instantly, I don't know what it is, man. I think it's because I ran that fan and I need to dust it.
Maybe there's some dust there. Dust is everywhere.
But China is always kind of an indicator of what will happen eventually to us. And what we're seeing out of China right now is they're struggling. Their economy's really struggling. Like, they're having a bank run right now. Okay. And they're trying to go in there, and the government's trying to fix it right now, because they were tied up in commercial property. And we're seeing the first signs of stuff over here because of oil, like we talked about with oil and the yields. Like, we're seeing all these things are building up, man. Like a pimple, I always call it like a pimple forming, pimples forming, and it's finally going to pop. When is that going to pop? That's the thing you got to ask yourself, is how much longer can we keep up this pace before everything has to come back to materialize at this equilibrium?
There is this also, like, this global scare that they're talking about, which is, like, many of these things come true if you follow them, and people have been ahead of the curve. What I'm talking about is, the Great Reset, as they call it. The cyber pandemic has been already been prepared for during these mock events. So I'm kind of like thinking this is just hanging in the air, but it's been put out there. It's not a secret. Like, this has to come to fruition one way or the other because it's been planned by so many important people, and every country, all the politicians, they just go along with it like it's their program or something. Like it's already been scripted out, you know?
Yeah, yeah.
These words are not thrown around for no reason. They just need a good catalyst, what I'm saying. They have a plan. And I'm not going into some conspiracy theories here. I'm just going
Right,
into
right.
what you can read in official documents from the biggest organizations in the world. And the prime ministers and the presidents, they keep repeating that, you know? So the Great Reset, what is that about? Well, the Great Reset is basically putting people on universal basic income and taking away, you know, like resetting credit, mortgage,
Yeah,
taking
yeah.
away what you technically don't own even,
Your
right?
liberties. Yeah, your
Yeah,
liberties.
and your liberties too. But like,
Yeah.
we'll fix up the world. We'll make it fair and square. But you got to give up the title of ownership to many of these things. So what's going to happen to the price of your house, for example, if it goes back to and your neighbors and you know the whole neighborhoods? If like 80% of these homes are mortgaged, and you know who's like, if it all defaults, you know what I mean?
Yeah, 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 for
It all
sure.
defaults, like it's a domino effect, and then everything gets wiped instantly. So these, as you say, it's a big bubble, and the value of a house, let's say from $500,000, will end up as, I don't know, $200,000
Yeah, exactly. Yeah,
very quickly.
it's unsustainable. It's been unsustainable. You can look at many industries, whether or not it's the housing industry. We spoke about with cars. You know, who can just go down to the car lot and again, I don't know what my $40,000 is in your money, or what it is in a franc or whatever. I can't tell you. I can just tell you what $40,000 means here. The average person cannot just go down and buy a $40,000 vehicle. Yet that's what you see.
Mhm.
And they come out with these crazy things saying, well, everybody's income went up 37% during these years. Okay, well, my income might have went up 37%, but my food costs has went up 150%. We were just talking about utilities. Utilities, 300%. My car insurance with a perfect driving record has nearly went up 100% with a perfect driving record. So when you're talking about, we're always talking about what's your profit to loss, right?
Yeah.
Like if talking about invested, I just told you three things that had well over 100% that got added on to me, but technically my salary took in only, according to their metrics, according to their studies, 37%. You know,
Hmm.
that tells me I'm at a loss of, I need to make up 40 more percent of my money. You with me now?
Yeah. Yeah.
So, and and to be honest with you, my salary I'm making now is actually less than what I was making before because of the position I'm in. But the actual dollar value per hour is actually right around the same, even
Mhm.
before the stimulus and all that. So on that note, I would have to make up another 100% more of a salary. You get me? You with me
Yeah. Yeah.
now?
Yeah. To
So my
maintain.
risk to reward, yeah, just to maintain. So my risk to reward is technically a negative, 60 to 100% that I would need to make up because nothing has changed on my end. Yet the world has changed on their end for everything. And
That's why
they've
we're
come
so
to
into
find out that,
crypto. Right.
well, yeah, and you have to be. And just like on the inflation calculator and things of that nature, you can see what a dollar was in 2017 and then the value of it today. And so I think $20,000 in Bitcoin in 2017 is like $25,400 today. So it's showing it's went up roughly inflation wise 25%,
Mhm.
ish, right? 20 to 25. Yeah, something like that. Yeah,
Yeah, it could be like, yeah, yeah, yeah.
something like 25%. So when
Uh-huh.
you start coming up with these numbers, you'll say, well, we probably need to come back and test that low of, $3,000 or $14,000. But once you add in the rate of inflation, you kind of can say, no, our low is probably going to be, 14,000 or whatever.
Hmm.
So it's just all these little things that are adding up. And But I will also say, from one of the most famous investors, when others are fearful, you buy. So you always got to keep that in your mind. There's enough fear in the world right now to scare people away. And it's not that I think people are fearful to invest right now. I think it's just they just don't really have the extra to do it. It's really
Yeah,
that simple.
they might even have ideas and good picks, but they don't have the liquidity. They
Yeah, they
just have
just
to
don't have
spend
the
everything
capital.
on life day-to-day expenses. So I mean, important important things to remember is no matter how little capital you have at your disposal, just have a slice of it, even if it's $5 or something. Take that away. You'll be fine. Like, don't spend it on entertainment or
Yeah.
just some trifles that, put that away into good projects. And, investment wise, technology's always been our friend and a very good place to invest in. So I would say look for things that you see will emerge in the future as very prominent, very popular. To me, like, that's the metaverse. I think you agree with me that we were saying today how you're kind of fearful on the road because these drivers, they're always in their phones, especially
Oh
women.
yeah.
What is that? This is like, addiction to the phone, to the internet, to that's gonna expand. That's not going anywhere. This will just multiply. Like, let's have this conversation in 10 years and see how many people have those goggles on their face and just
After
sit at
talk.
home. Yeah,
Yeah.
and sit at home and even work and meet friends and have like 50% of their life inside that machine thing. And to me, like, this is foreseeable. This is something you can actually kind of like what's the word, foresee or predict
Yeah.
in a
Yeah,
way.
for sure.
Yeah. So even with those $5 I said, just get a project, invest in something that's going in that direction, technological. Or maybe if you have more empathy and you see that, there's this green initiative and carbon credit stuff or whatever, save the planet, put some of your money into that, because that will also grow. There's a big push for that.
Yeah.
Yeah. So yeah, we are navigating tough times, and it's getting harder for everyday people. It's not getting harder for the elites. It's not getting really tougher for the whales, as we've mentioned, because they have money to play around and manipulate things and take a loss here, make it up there. But for us, we're talking like, you know, real life investments. It is the time of sacrifice and a time of wise decisions, I believe. Even with little
Yeah.
capital that we have, it is.
Oh no, I 100% agree with you. Uh, and it's not just now. Like I don't know if I've ever shared with you, but the four S's and the four R's. You always got to practice one S and one R at all times in your life. And the four S's are save, stack, spend, splurge. Okay, that's your four S's, and then your four R's are rest, relax, refresh, and renew.
Mhm.
Okay, you have to practice one S and one R at all times, and not just now, but I think it entails it more now than it did 2 years ago. And I'll give you an example of a guy I know. Okay, he complained because they were cutting back hours at a job, right?
Yes.
And any time in the last 2 years, 2 to 3 years, he could have walked in and worked anytime he wanted. But did he? No, because they raised the salary up. He was happy with or he was making at the time. Inflation hasn't kicked in completely. He got used to it, got used to spending that money. Then when times got hard, now he needs that money to survive, and he didn't take the opportunity to stack his money or save his money, but he spent as much as he was getting in. And don't get me wrong, it's a common mistake because if you're not good with $1, you're not going to be good with 1,000, and so on and so on. And that's like you'll see me making notes to the Exmo team in the study area where I'll say, look, if we want to teach you one thing, it's always to treat $100 like $1,000,000. Because once you get that mindset that $100 is like $1 million. Once you do get to $1 million, if you do, and you may never, it's not the point. The point is the mindset, how you think and how you view things. And go back to your point of $5 and $10 here. That's how I started, because I was buying ICX $5 a week, $10 a week. I was buying V chain $5 and $10 a week. This is when it was under a penny. Watched it. I was buying Cody at 2 cents and then $5. And you're thinking, oh my gosh, it's never going to add up. And then Cody, I sold Cody at 50 cents, 25x.
Mm-hmm.
Now, did I have a lot of money in there when it 25x? Okay. I can't remember exactly how much money I had when I cashed it out, right? I can't remember exactly. But I can tell you right now, it's probably no more than $100. Not when I cashed out, but what I actually put in of my own money. But that $5, as you say, where you got to sit back and be like, okay, I'm not spending no money. Don't go out there and impulse buy something. Spend that $5 on the market. And by me doing that in VE chain and ICX and Ethereum, and I can go on. I can name all the different ones that I bought. Rocket Pool, the one that finally went up to $50. I remember buying it at $5. And Solana, remember I was telling you I bought Solana between $2 and $5. And just I can name, but it was just 10. So I like 1 week I wouldn't buy none because I was putting my $20 onto other ones, But essentially I was taking $20 a week, $20 or $30 a week, and just buying and buying and buying. And it paid off. It really did. It paid off really handsomely for me. How much money did I put in overall? I couldn't tell you. You know what I'm saying? I didn't have if I pulled out my old books, I could probably tell you the exact number of what I did. But I knew what my strategy was at that time.
Mm-hmm.
Like you said, didn't really care what the price was on down days, like Solana, for example. Solana is a perfect example right now, if you want to say. On the down days, when it's down 2, 3, 5, 6%, go ahead and get in there and put $5 on it. Because the only thing you're caring about right now is a level. And if that $20 level holds, we can aim, as we spoke before, between $36 and $50, right?
Mm-hmm.
So the risk to reward is still good. But then you apply that same metric over another 2-year time span. Now you're talking $150 to $185. Potential double tops, it's whatever it topped out at. Some up and comers. So don't be discouraged. And this is what we always try to get across. If we don't, we always do. No use to get excited. Mm-hmm. It's not going to get you anywhere. Don't be mad that you didn't buy Bitcoin at $15,500. And I'll go on this example here. I've told you, and I'll just tell if somebody happens to run by this video. I did buy a little bit of Bitcoin at $4,400 after the last drop. But I wasn't all in on Bitcoin, like I told you, until we got past $12,500 on the very last cycle, remember?
Sure.
And because the structure had to verify itself. And once the structure verified itself, the philosophy, which is the philosophy I like really better than really trying to scalp the bottom of the sea, is it's okay to pay more if you realize it's going up. Mm-hmm. We have quite a few examples of that right now. I can give you a couple off the top of my head. You can wait for the breakout on Solana of $26.50 before you buy, because now you would probably have a target of $36 to $50, right?
Yes.
That's one example. Second example, I just looked at it today. Matic, it's at 50 cents, but you really can't get bullish on it until it technically gets past 57 cents. So your risk to reward, you can get a 10%, 12% going up. But then if you don't catch it exactly right, it might go down to 22 to 30 cents, right? So now you've lost more money. But if it breaks out at 57 cents, now you're talking about it going after $1 again. Once we get past $1, that's when you're truly bullish. After $1. There's another example. STX is another one. You know, you did a long the other day for 12 cents. We both basically posted the same chart where my my idea was don't enter until we bypass 57 cents, where your idea was go ahead and play the swing.
They
You know what
work
I
well
mean?
together. Yeah, yeah, yeah.
Uh,
They work
and,
well.
and
That's a complementary trade idea, you know?
well, yeah,
Yeah.
because I was like, me personally, and I'm trying to tell them like, I guess that's where I'm more conservative, and I gotta wait for certain things to come to fruition before I go in. But then a lot of times once that happens, I feel more comfortable making that call. You know what I'm
Yeah,
saying?
I know what you mean.
So
It's uh-huh.
no, go ahead.
It's just a matter of styles because I completely and perfectly understand what you're saying, and I would apply that too. But it's just like a preference for a different type of setup, maybe, where I see momentum building up and I see just these things is like flowing in, and there will be a spike, you know?
Oh yeah,
And that's like, I attack from the bottom and you attack from the top. It's like same thing, you know?
but it still works out because
Yeah,
here we are again. We both came to the same conclusion.
yeah,
57 cents, right?
right.
I think you said 58 and I had 57. But basically, we both knew the importance of 57 to 58 cents.
Yeah,
That's the key. Now, if you was up to here saying, well, we got to get past 75, then we got some problems, you know?
right.
But the way we work is the more aggressive stance is, yeah, go ahead, play that swing. Get you 10%. Get you some, and that's fine. And you can do that. But I always try to, personally, for me, I gotta feel like I gotta cater to that person that might be the first time they ever look at my post.
Yeah, yeah.
And they're probably going to say, and this is just me speaking, but I always try to keep in my mind who I'm talking to. And because the stuff I'm trying to relay, and I'm sure you are as well, is not things that you heard when you first started investing in crypto.
No, completely not. Nobody told
Right.
me about DCA until I met you, like truly believing in it. And maybe this doesn't appeal to greedy people. It doesn't appeal to the want to get rich quick crowd. It appeals to a seasoned mind and a person who's been through the ups and downs of the markets and can sacrifice the quick gains for stability, rational, logical thinking, and a long-term kind of approach. Because like with your Matic example, why not DCA now? And even if it goes to those 25 cents, if you're prepared to
Right.
take that, amount of time and divide your capital, it doesn't have to be like you have $100. You want to just divide it and bear out the whole process until it dips and then bounces and dips again, and then you're good. Maybe you'll average out to 45 cents as your entry level, right? You'll still be
Right.
okay when it breaks out to 80 cents, so yeah.
Well, but the counter argument to that is, Camille, though, is if that level would not hold, there's not much holding it from going down to zero, especially like in Matic, where there's not a lot of support levels. Like I think I counted it in the video. It was like 7 weeks. That was it. 7 weeks where we stayed at this one level. But other than that, 1,000%.
I know what you mean.
1,000% move. And when there's not enough stability, as you just said, like looking at long term, it ain't like I'm looking at Litecoin. It's been out since 2016. It's not like I'm looking at XRP where there's levels here that we got. There's going to be some stopping here and there before, like we got a death cross right now. We've had a death cross set up on the weekly on XRP, but you're not seeing that typical tank that you generally see when a death cross sets up. Why? Because you got levels that have been established now for years, slowly built up over years. And the reason I wouldn't say that for Matic, and then we're just talking about Matic for example, is because I feel like the magnet is drawing us down. And until I would get that, because once I get that clarification of that 57 to 60 cent breakout, I know, I can't say I know, I'm not, expert on saying for sure where it's going. I would have a higher possibility of hitting that dollar to a dollar 20 range once again,
Yeah.
once we would break out, compared to what if we just come up to 57 cents and just tank right down to 30 cents. Now you're trying to swing it for 10 cents. Your order may not go through because other people that's more important on the scale, their orders will go through, and your little $100 order won't go through. Now you are just falling with the knife and catching the bleeds. So,
Mhm.
but we got roughly a minute here. If you would, if you want to send another link, we can talk for another 15,
Sure.
20
Yeah.
minutes. Too
I
tired, but
will.
these are really good conversations, and we would like to follow up with it because these are wonderful examples of Matic, and then we're going to tell you some good examples of stuff we see that we feel is developing right now, and kind of like the state of what we think is kind of going on, and then we'll leave you all alone. So I'll
I'll
talk to you
think.
in a little bit.
Yeah, I think we can show a few charts here. All right.
Yeah, we'll, we'll
Back.
bounce around.
Yeah, with part two in a minute. All right. Okay, guys. Here we have Matic to the dollar on a 3-day scale, as John has prepared this chart and posted in our discussion group. Okay, so should I zoom out more? Is there anything else that we want to see?
That's the history of it right there.
Yeah.
There's the history.
So
Well, we spoke about it there earlier, Camille, about, why not start buying this, falling knife. You were talking about it. And the reason I said I would wait until the 57-cent breakout before I would buy is because here's the thing. When you look back at that 30-cent range, this is a 3-day chart. We had maybe a month there at 30 cents back in May. We didn't have many days.
Here?
Yeah.
Let's check.
It's not many days, that we stayed in that range of that 30-cent range.
48 days.
48 days. So you're talking a month and a half. Generally, to get a nice consensus of where the market is going, you would like to see us hang in that area, which is similar to how you're back here, even at the beginning of the token, Camille, after it went up to 4 cents and then came back down.
Here.
Look how long it stayed in that area there, all the way across. Even though it came down 84%, but it came back up. Look how much longer we still stayed in that area. Keep on going across, all the way across. Just keep on going, keep on going. Yeah, see, look at all that 183 bars essentially.
That's
yeah.
550 days.
And this is kind of what you would like to see. Which gives you hope when you think about Link. See, this is why when we're talking about Link, buy a Link a day.
Yeah.
So you could put a comparison chart of Link up there, and that would give you the idea of oh my gosh, this is what Link could do, right?
Okay. So we got to focus on this area here. Wait, that's not the tool. Yeah. This area here.
Yeah. So you have all this long consolidation period, but you don't have that after we surged.
Mm-hmm.
And
that's not a Link.
Yeah, and you can put Link on a 3-day and where we're currently at. And this kind of gives you hope to say, can Link pull off a run like such? Because look,
sure.
you compare that to how Polygon ran, and so now you start to get a little bit of hope here. Can it go up?
7.
Yeah. So, yeah. Can we really, go up 1,000% on Link here? Is what you would want to ask yourself, because that was the move it made back here on Polygon.
I mean, when I think Link, it's always for me around $7. $7, just like Link, because it's been here since May of last year. Maybe a bit lower, maybe a bit higher, but always around that level, $6, $7.
And we're slowly taking those And but the difference you got here is you've created some support on the back end
Mhm.
in Link, which you don't have in Matic. So you would have two different completely investment strategies going forward with these two tokens. So, like, let's say Matic, for example, since you don't have a lot of support at that 30 cent range, me personally, I feel like that is your magnet drawing us down.
Mhm.
It's working like a magnet. And I made these notes here that once I saw the 84% double top pattern from the beginning, that
Right here.
could we
Yes.
repeat this? Yeah. Could we repeat this process? And then we went up there to that 280, $273 range.
Even
And I
even
went at eight.
a triple top, if I may interfere.
Yeah, you go ahead.
Here. 1, 2, and 3. 1, 2, and 3.
Well, I drew that. That's actually not a top. We actually topped there at like 3.5 cents. That's just my bars.
Okay.
Yeah, that was my. It actually topped there at like three. That was just my bars, so I could see it. It was nice and clear for people to see it. But it created another double top there. See, after it did the 4 cents there, Camille,
Mhm.
at the beginning. Then if you come at the 3.5 cent, it did a double top and then it rejected again.
Okay.
You notice that 4 cent, and I'll come down right down there. Yep. See how it rejected there to double top again?
Uh-huh.
Okay. And now once we came back down to that trend, we didn't lose 84% off of that double top the second time. Okay.
Okay.
And I really could have broke this chart down like way, really broken it down. But I was just trying to give an overall consensus of what the moves generally do. You with me now?
Sure.
So I got the 84%, and then you come up here to 84%. How we double topped up here at the when it topped at $3 or 287, whatever the top was. I don't care. But so you say what was 84%? Well, 84% of that drop would have been 44 cents, right?
Mhm.
But we came lower than 44 cents. We actually came down to 30 cents. This is why we talk about level trading and why level trading is so much more important than trying to catch bottoms. Because if we'd have went on this metric alone, even if you'd been buying at 44 cents, right? That's what the 84% drop is there from the top. See right here? Even if you would have been buying there, would you have been scared to catch a falling knife? This is where you kind of ask yourself that question, even at that time.
Yes.
But you see, we have a little bit of support over at 30 cents.
Mhm.
So even if you would have been buying at that 84, you know you'd be close because following the same metric of 84%, even though there's no history attached to it, you still would have only been down maybe 25% going to 30. But then once it bounced all the way up to $1.60, which is where you see my B at.
My strategy would be to start DCAing at this 44-cent level. And then
Right.
how long would you DCA for? If you do it
Probably
weekly. Yeah.
just to your support level. It's not so how much long you would do it, it's until you would lose what you would call level trading, and why we talk about level trading.
Yeah.
Once you get into a certain percentage of that level, so let's say we have an idea. Now we've hit what it fell before, 84%, right? How much more can it drop? So we would come over and say, well, we got a little support at 30 cents. That would probably be our stop loss then, right?
Yes.
So what's that percentage from 44 down to 30 cents? What was your?
Let's calculate.
It wouldn't be very much. It would just be what, 25%, 27%,
Yeah.
2%. So that's a little, that's being a little bit more aggressive. Typically, when I level trade, I like to be within about 15% of the next support level, typically. But this is just an example to show you that once we've met the criteria of the 84% drop, that we may not have much more to go. You with me now?
Yes.
And now, can we look for a double top again? And if you look across there at my B, look at how much resistance you have built up in that area there at my B.
Uh-huh.
So you could say we
Right.
double touch here, right? You see there are like 5 different touches of that level, right? So
Mhm.
there's some significance there, right?
Yes.
Following the same exact metric, Camille, of 84%, that's what would give me my target of down there at 22 to 23 cents. You with me now?
Yes. Right here.
Yeah. Because you see that is the range of now, if you would go back to the beginning, and let's say, do you see how we got this last green right here? This last green top first, Camille, before you go back there. This last green top,
Here on the B.
the other one right after B, the one right after that other side,
Here.
the other one, right when we broke out of that downward channel.
I gotta zoom in.
Yeah,
Can you tell me a date?
yeah, right
Roughly?
there, July, right there, that one.
Yeah.
We could potentially come up to do a double top there, right?
Yes.
Which would be 89 cents. And you could apply the same metric. Now, here, if we really broke it down, I'm just going on a real breakdown, right?
Yes.
Now go to the beginning of the chart where it double topped at 3.5 cents. See where it and then figure out that drop.
Here's that.
Yeah, down to the trend line
Uh-huh.
and see what that percentage is. So now we could start even narrowing it down maybe even more. 64%.
64
To take that 64%
from
from
here.
potentially there, if that's going to be where our double top would be, which you do got some resistance bands there. So yeah, 64%. Boom, 30 cents again. See, so when I would say, where's my DCA range, Camille? You have right in there
Okay.
on 2 different. Now, again, that's breaking out of that channel again. And this is where like your GAN fan would really kind of come in handy. But
Sure.
when you look at that, this is just basically breaking it down, bare knuckles. This is what I see, pattern recognition. Would you agree with that sentiment of basically coming back again here to the 20 to 30 cent range?
Definitely.
Okay.
I don't need these momentums. I just want to yeah, I agree with you.
But you also see where if we break out of 57 cents, now we can touch the upper band of that channel. You with me
sure.
now?
From here
So,
to here.
yeah, up to there, right?
That's like a 100% move.
Yeah, 80%. And again, that number gets lower as the day goes. So the longer it takes us to break away through that number, the lower the number goes on the top side. That's the reason why I would say I would probably not want a DCA right here, you know?
Okay. Cool, I get you. Look. Boom, boom.
Yeah.
We lost the 2-1. We're going for the 3-1. So that makes sense.
And again, if we break out of there, then we're talking around that 85-cent range, a dollar range, right?
Yeah. Where the cloud is.
Yeah.
Mm-hmm.
So
It's gonna
another
stay
indicator that kind of shows us, right?
beautiful. Yeah, we're doing something here. Okay. Another angle we need to apply is from this top. I think that's a
That
valid
was
point.
what I was thinking about. Was that angle? That was the angle I was thinking about.
Okay. Right.
It's a downward trend.
I just gotta switch the colors here for this one. Not too much red. Okay.
I'm lost in translation a little bit here now.
Too many things going on, right?
Maybe hide the one you got from the bottom and just run the top one to see what we got going on.
Sure.
Just to see where we're kind of how it lines up there.
Can you see now?
Yeah, I could see. And you got.
I'll get a different color for that too. Too many reds.
Okay.
Wait. Get a purple and make it thicker. Okay.
See,
now
you got your 8-1 all the way up at the dollar range, which again, that's really your real breakout, essentially.
yeah. But to get there, like, we got to go here first.
See, and you're even higher. I'm at, 59 cents. You even came up at 63 cents. So,
Mm-hmm.
you know, again, I was just drawing straight up trend lines. And, you're breaking it down a little bit more, I guess, technically. But hey, still both get where we need to go.
Sure, and there's one more thing. Let's pull the fibs here on this one. Huh,
I already did that, yeah.
702. Now we got to look for divergence. You had indicators on here.
Yeah.
And there is divergence.
Well, you're on the 5-day, which I was running the 3-day, but see, you're aiming straight down. You got a bearish divergence off on the scholastic. And then,
I mean, the price is lower, so the indicator is lower. If you're talking about the tops,
but it keeps coming down from when we hit the B. If you follow the B from the scholastic, we're just constantly trending down more and more and more,
Here.
Now it's aiming straight down again, which comparable to how it was when this last drop where it spiked, this one's more of a steady drop down. If you look at it, and I was on the 3-day. See, this is how I drew the 3-day, because you see how it's still curving up here.
You like this one, right? That little formation.
A little bit. We're still staying within it, and if you can see, that runs all the way to 2024. So this is probably going to stay pretty consistently in this range. I don't foresee a lot of ups and downs for the last 2 months of the year.
The RSI, when we're talking about, about June, we're building something here. Look.
But again, we have a bar. We have a resistance bar here, though. That's why I drew that.
Yeah.
On the other side.
Yeah.
You see what I'm talking about? In order for us to even think about breaking out of this downtrend of 57 to 63 cents, you have to break through this area here on your RSI.
Mm-hmm. Yeah, you gotta
even think about getting to the top of that RSI channel.
But look here.
Right.
We're
still limited by the down, but we broke it out essentially there.
We're gonna fight here at the 50 level.
Right. And that would probably be our reject zone.
Let's imagine this happens in late October.
Mm-hmm.
So what would price do?
It'd probably just get up to that level there. Yeah, that 50.
Yeah. Right
it's
there.
It's going to be our reject zone somewhere in there.
A little fake out, maybe.
And that's where we'll have to go from right there to see if we stop there. That's the thing. If we get past there, and that's why I reiterate, I wouldn't personally be a buyer until we get past that point.
Right. I completely agree. Let's go like this too.
Mm-hmm. Yeah. There's different ways of going about it. But everything like still
maybe like that. Look.
Yeah, there you go. Yeah. Mm-hmm.
Super.
Still comes to the same conclusion.
Uh-huh.
So that's kind of where we're at. Like, we have to get over this 60-cent level, and you could play even 15% up right now, but it wouldn't take much to bring it back down. That's the thing. It's like, is it really worth it?
You can revisit 30 cents quick.
Yeah. And me personally, I don't feel like, for me, if I'm advising somebody and if it was my money, to catch 10% or 15% and almost having to catch it just right, if you don't have your numbers, now me and you can set our sell orders for that, right?
Yes.
58 to 60 cents and feel happy. But, can that new person have that same sense of, Because what they're going to see is it's up 15%. Why is it not going to go up 25%? And then greed will set in. So that's why I always say I try to feel like I'm talking to somebody that's not going to know what's really going on. And that's why my advice would be, because I would feel more comfortable personally, me speaking, I feel more comfortable knowing once I can establish 57 cents, as support, then I know we're coming up to that 90 some cent range, right?
Right.
Better
Definitely.
to pay more. Better to pay more.
If you know it's going up.
If you
And
know
that,
it's going.
yeah, breaking some horizontal levels are key. I want to see this in my Yada chart. Wait, sorry for messing up your your clean outlook here. I'm gonna
Well,
remove this.
I try to stupefy everything because I always tell you the things that always drove me crazy when I first started trying to read charts was people had all this stuff on there, and it's like,
Yeah.
yeah, it looks nice and professional, but I don't know what it means. But when I can put simple things on there like 84%, 84%, very simple, simplistic,
We were playing around with Injective. Let's go back to Matic.
And you see it where I wanted to go to. See, it's holding that line, bro. Look, I'm telling
Yeah,
you, this.
yeah, this one, right?
Yeah, that's the line I'm talking about. Yeah,
It's like
telling you, man.
how, but it's true.
Huh?
These angles work. Like it's a perfect, it's a perfect line here.
If I think I'm seeing what I think I'm seeing, when it comes to this could be our next Solana for this cycle.
Uh-huh.
I'm talking $35 to $50 pretty easy. Yeah.
Solana also liked this $8 level, didn't it? Before.
Yeah. But I mean, this looks like that looks all like a big wave 2 to me, and we're getting ready to enter wave 3. Like we entered wave 3. And now we did 1, 2, 3, and like wave 1 all the way up to 20 some dollars, wave 2 down to $1.20.
Uh-huh.
And look at wave 3, put a pop us all the way up here about $36, man. 36 to $52.
Why not? I can wait. Oh, I see something. Hold on. Gotta switch candles. We're gonna apply the good old fib extension here. Where is that? Here. So candle close. This one's the lowest candle. We're gonna go here. I'm gonna go here. 1618, $22, $23.
And that also lines up with the theory of that if we hold that $5 and some dollar range, we should knock out the whole bottom down here, which is 300 and some percent, which takes us right up to where you get that number too. So two different ways we both got there.
Yeah. And $11, like you said, also comes up here.
Yeah.
Mm-hmm.
I mean, I got it scoring to 14. So there should be a 1, I believe it's a 1, 2, 3. There should be like a 1, 2, 3 fib. And that should be right around $14.
Let's try this.
But look at us staying.
Fib? What is the 1, 2, 3 fib?
I don't know.
Oh, it's the 1.237 or something?
Yeah.
Okay.
1.25 or whatever, but I know some people run the 1.27, 1.23.
From here, from the bottom to here, or from this bottom?
Say that again, Camille.
From this bottom to this top, and then extension. Yes.
So you should be able to just run it. Yeah.
Okay, I know what you mean.
Because the
1272
wave 3, right?
Yeah, it shows me $18.
May have to, yeah. Oh no, you know, Oh, okay. See you,
Hi,
girl.
Ari. How you
She's going to
doing?
cheer. She's got cheer practice.
Cool. Are you driving her?
No, Shantae takes her.
Okay.
Yeah, Shantae's taking her. But see, I'll tell you another easy way I kind of came out with a thing here, Camille.
Sure.
Take very good notes. Like if you go back, like let's go back to the history of it, right? Do like goes back through the history. Look where we started at, right?
Uh-huh.
All the way down to what, 40 cents? You can go in the wick. Yeah. Okay, now we came down, we found support at what number? What's the next support we came number to? That other wick you just went to. Right there.
65, 66.
Now, look where the next support is. Now, keep that number in mind, 65
Mhm.
cents. Run a percentage from that 65 cents to the next wick down after we ran all the way up until we wick down again.
You mean here?
No, in July. July
Where's the-
2022.
Oh, okay. Here.
Yeah,
Sure.
just give me a percentage from there to there.
70.
71.
Yeah.
All right, now take that 71%.
Mm-hmm.
Now look where your next wick is that we came down, where we found support at.
Well, here?
Yep.
Okay.
Take it.
170.
117%. Now look where we're wicking down now when we're finding support.
Here?
Yep.
Okay.
See
120.
see the pattern starting to form?
Okay.
What are we doing each time?
Going up 100%.
Over 100% each time. So let's go on that metric of holding this, right? Where should the next
Here.
stop? Where should the next stop be? There you
11,
go.
12. Yeah.
That should be our next consolidation area. Somewhere in this range. You with me now?
Oh,
Because we're creating this pattern as we move up. The first one was 70%, and every one after that's been 100%. We could even play it safe. But another way I figured this out, Camille, was if come to the wick that we just had, the one you were just at $5 and something, right? Hold that one there.
what about it?
All right. Now you got that number, right? 540. Run it from the wick that we just had as $1.05. Not down, up. We need to know that percentage. There you go. Apply that.
345.
Now apply that percentage from $5 from that low right there. There's your target.
24.
There you go. Because
24.
we've looked out that whole area. You with me now?
Yeah. So it lines up with the fib extension thing that takes you to the double top here. And it
Yeah.
looks like it looks like a giant inverse head and shoulders.
Yeah, it does. Yeah, it does.
Oh.
And this is why I get excited. And
Look.
now you're starting to see what I'm trying to, why I told you this could potentially be our next, our next,
Our next, right.
our next Zolana, like for power moves of the market.
115 on the breakout, which is very close. Ooh.
Told you.
$87.
I know.
10x.
All right. Now, first thing is, before you get too excited about that, Camille, back here at the first part of 2022, see the wick
I don't get
down?
excited about crypto.
See the
Okay.
wick down where you got your TD9 right there at 2022?
Here?
Yeah.
Okay.
Run that to the top of where we hit at $10.
Where was $10?
Right there at your TD9 top. No, in April.
Here?
Yeah, run it from there to there. Not percentages. I need a trend line.
Oh, I'm sorry.
No, you're fine. No, you're fine.
Like that?
There you go. Now, see where we're topping at here on
Uh-huh.
that trend. Right now, it sets at about $15.50, $14 to $15.
Yeah, yeah, yeah.
That's where I anticipate we're going in the meantime.
Nice. So it's like this whole thing is a channel.
Yeah, 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 for sure.
If you have a trend line, then you have a channel.
Yep. And then now when you look, now you're talking the double top comes into play.
Uh-huh. Or even like,
Yeah.
mhm.
That's my first target. My first target's $14.
Cool.
But I feel like we're going to break out of this channel because I want to show you something else coming. I want to show you one other thing. Keep your parallel channel there, but I want to show you one other thing.
Just wanted to stack it, and it does line up a little bit, like here and here and here and here. Okay, anyway, I'm gonna keep the original one. Uh-huh.
I want you to run a trend line from right after October, that green wick.
Here?
That one, yep. Now, same place that we ran it this time. And I hope this ain't confusing you, but
Like
now,
that?
yeah. Just like that. Now look at this. Now apply your parallel channel there. Because this is how I feel like we're going to continually move now.
Mm.
So that needs to come lower then. Okay, so that's out. We're outside of it right now.
Doesn't
Right.
mean we can't get back into it.
Right.
Maybe like this. Maybe like
Yeah.
that.
That's the way I was looking at it. That we're following along this line here.
It's very steep, but anything is possible.
But look where it comes up to once we break out of there. $39.
Yeah, right here.
Yeah.
It
And
would
it's high
have to be
75. And this is this year. Like this is this year. And like I believe that if we can bypass $14, we're gonna scoot up into that $30 range pretty quick.
Let's see.
It's just fun to play with because like this is really telling me some stuff here. Like I can really see 14 hollering at us again, ain't it?
Yeah. Everywhere we look. And then, huh. Mm-hmm.
So what do you think? Because when I'm looking at this, I'm thinking we got a potential to be in the 30s maybe by the end of the year if the markets stay up.
True. I would say too. It's going for the all-time high, it seems.
Which is still a good risk to reward here. You're talking 200%.
I mean, assuming it's gonna find a support here at the 2/1 cloud, perhaps. That's between 550 and 450 support.
I'd like to see us not drop below like 550 where we wick down. This is where I feel like if we consolidate anywhere, it's going to be between this 550 and $10 range.
These dots here, that's the TD risk line. So if we break that, we can go higher.
Okay. And for
Oh,
something else that you see that I don't, we got less than 2 minutes to go.
we gotta turn off some indicators here. MA cross. Ooh,
Just take
found
off the
support.
board.
Found support on the death cross.
Yep.
Like it's like a nullified death cross. It materialized here, but then like it's gonna reverse.
Yeah.
Interesting. What else can we see? Bollinger, squeeze. Oh, we're in a squeeze. You see that?
Yep. Uh-huh.
They're not invalidated yet. So let's see the Bollinger itself. Uh-huh.
So 14 may be kind of, and I like that you got that other line there too, Camille, because that's telling me $17.
Yeah,
Instead
right
of
here, right? This.
Yeah, that's telling me like $17 by the end of the month. Yeah.
Sure.
We're less than a minute to go. Is there anything you want to finish up here on, or you want to send another link, or?
I think we're okay. We covered Matic and Injective quite in detail. So thank you for that. I hope the family appreciates that too. Bollinger Squeeze surprised me that look, it's printing so many signals here. This is about
The
to
only thing
pop.
I would like to add is even if it gets past $10, you're okay to buy,
Uh-huh.
because now we're looking at $14 to $17. So even if you don't want to buy it now on contingent of the breakdown to $4, wait till $10. You still got 70% return potentially.
Look how hot Injective is.
Oh yeah.
Third place in oh, my trade hit. That's like a 20% play. I didn't post